Hello, everybody. This is Toni Turner, and welcome to the market now as of Friday, September 8th at about 2 p.m. Eastern. Well, I hope you all had a good summer. Today, the S&P 500 and the NASDAQ are positive so far. They're teetering a little as mega caps, including Apple and Tesla, gained ahead of a fresh inflation reading next week that will provide further clues on the U.S. interest rate trajectory. U.S. Treasury yields edged lower today, helping boost major growth stocks, with Tesla and Meta Platforms leading gains. Shares of Apple rose 1.3% today after a two-day sell-off, following news that Beijing had ordered central government employees in recent weeks to stop using iPhones at workplaces. And on that news, let's go on to three charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. Of course, this is the exchange-traded fund that closely follows our benchmark S&P 500 index. Now, when I captured this chart today, the SPY was trading at 7% below its all-time highs at $479.98. Those all-time highs were in January of 2022. And today, the SPY is trading at $445.17. You can just see it right here. See, it's just below the 50-day, the green line moving average, and just atop the 20-day moving average. Now, the 50 days coming in at $446.80. The 20-day moving average is at $443.82. And the SPY is caught just between those two major averages at we're going to call it $445. Now, we know, look left with me on the chart, we know that after we had the consolidations in April and in May, we know that the SPY broke out to a high on June 30th at $444. Then backed off a little bit and then started using the 20-day moving average for support. It retested this high on June 30th at 444. Again, back to the 20-day moving average. Then it rose up, excuse me, and traded at a premium to the 20-day moving average for quite a while in July, until on July 27th, it gapped open and rose to an intraday high excuse me, of $459.44. Now, that's the last relative high we've seen since then. From that high, the SPY, I'm a poet, right, fell down through the 20-day moving average, back down through the 50-day moving average, and on down to August 18th, when it fell, it gapped down to open at $433.37. Now, from there, after that big run up, and we had a pretty decent, from March in this year, we've had a pretty decent run up with the SPY. Again, it did fall down to gap down to those lows at about $433. Then it rallied. So remember, what was support is now resistance. So what was support with the 50-day and the 20-day became resistance. So after that low, it rallied up, hit its head on the 50 and 20-day again, backed off a little bit, then took a running start once again in August at those two moving averages, the 20-day and the 50-day, and it managed to buck up through them, making a high of $453.67 on September 1st, so better than nothing. It did find resistance there. It's so incredible how support and resistance work out so much of the time. If you look left on the chart, this pivot right here at 453 lined up with the gap down here in early August, same price. So the sellers came in both places. It fell back down again. And then, as I said, we're back up right now to $445.17. So now what do we have here? We have resistance at the 50-day, right? It couldn't get over it today so far as yet. Anyway, we have resistance here real close at the 50-day at just call it 447 right here to make it even. Also again up here at 453. So that's resistance, potential resistance, and it's been there before, so it may be a little stronger should the Qs start up in the coming week. We do have support, very, very close here at $400 and almost $44. Call it 444, 433. And if it goes below that, we have the August low at 433. And then we have a low back here in June at 431. So there is potential support here. Now, next week, please know that it's going to be an important week, and a lot of things are going to be happening. We've got the CPI, or the Consumer Price Index, being announced on Wednesday morning. And on Thursday, the PPI, or the Producer Price Index, is going to be announced along with retail sales on Thursday. So all of these are going to give the Fed inflation information, and that information is going to move the market. So goodness knows, just please stay tuned and please trade very, very carefully. Our second chart today is, as usual, the chart of the Invesco QQQ, symbol QQQ. This particular ETF represents the top 100 non-financial companies by market capitalization of the NASDAQ 100, including companies like Alphabet, Amazon, Tesla, Microsoft, AMD, that whole group. Now, when I captured this chart today, the QQQ was trading at $372.33, about 8% below its all-time high in November of 2021 at 408. But what I want to look at here is let's go back and see what's the good news instead of the bad news. So you can almost see the beginning of the year here. Look left on the chart with me back here. What I want us to see, since the Qs opened in January at about 268, notice how, except for this pullback here in February, and it wasn't a bad low or anything like that, but it did kind of drift lower here. It moved up in January, started drifting down a bit in February. One day it closed below the 200-day, but just barely. For the most part, the QQQ, which is made up of a lot of momentum and trades and tech stocks, has moved very, very well. Traders can't complain about this. It moved up the 20-day moving average right here, the 50-day moving average poised below it very, very nicely. It moved up pretty dramatically, and it actually moved up about 44%. So if you bought on day one in January and just held it to this high up here, the July 19th high is right here. It moved up about 44%, and it moved up to the July 19th high at $387.98. But nothing goes up forever. Then it slid down here. It went down to the 20-day moving average but couldn't hold. Came back down here to the August 18th low. And it gapped down right here to open at $355.26. So then it rallied back up, hesitated again. What was support became a resistance. The 20-day, the 50-day was too strong. It slid back down again, then took a running leap at those two moving averages, and then finally moved back up to the September 1st high at about 381. Then back down to the 20-day moving average, and where we are today, just sitting. You can't even see the price here, I know, because it's kind of melted into the 50-day moving average. The market tried to go higher today, but it was a slow day, and it just kind of burned out here. So we're right about where we opened with the Qs at $372.33. But altogether, looking at this chart, what does it tell us? It tells us that tech stocks and momentum stocks have given traders, of course myself included, a very sweet uptrend this year. But at the moment, this particular index is hesitating. You've got to remember that traders take profits, and from January until mid-July, this market has been really, really good. And the markets don't continue higher forever. The markets of industrialized nations move in cycles. Traders take profits. Also remember that the stock market moves again in cycles and has to rest from time to time, like all of us do. So for right now, it's kind of especially with all of the inflation news coming in next week, this is a time when sometimes if being on the sidelines is not a really bad idea. We're going to have some fantastic opportunities in the near future, but at the moment, being on the sidelines is not the worst idea. The Qs now have short-term resistance here at 381 and support at about 354. So just keep that in mind, and until they decide which way they're going to go. Again, remember, cash is a position, and if you do trade, please trade carefully. And for those that have to be trading no matter what, I went through, as I usually do, probably a couple of hundred ETFs today. Not seeing a whole lot that I like for setups, but I did trip over the alternative harvest ETF, the MJ. We'd looked at this before, but it's had some news recently. It has 28 holdings. The top holdings are Tilray, Kronos Group, Canopy Growth, Aurora Cannabis, and Constellation Brands. And again, there is 28 holdings in all. Now, when I captured this chart today, the MJ was trading at $4.06. So a little history on this. You can't see it on this chart. A little history. The MJ opened at $25.68 in December of 2015. That's when this ETF was put into place. In September of 2018, it made an all-time high of $45.39. Then it began to slide lower. It slid down until 2021 when it made a pop up real quick, but and then hold on. It made an all-time high of $45.39 in September 2018. I said that already. Then slid lower, made a pop in 2021 quickly, and then came lower again all the way down here to recent lows at $2.84 last week on August 25th. Now, what's going on here? I saw that Tilray is starting to move pretty dramatically, and that's one of the, of course, holdings in this ETF. I read that word is kind of slipping out here that more approval regulations could be surfacing in the near future. I know Tilray bought some other companies and it took off. And another thing here, cannabis stocks don't trade with the market. This ETF just goes where it goes on news and earnings, if there are any, in the world of cannabis. So for right now, with what we have going on in the market next week, it appeals to me that the MJ does not trade with the market. So it lowers the risk here as long as you're very, very careful still. So in the coming week, if the this particular move up here is very steep. I agree with that. Good news, but you have to be careful. We look at the RSI here, 14-day. We see it as very overbought. Okay, so whether this will move higher or not next week is anybody's guess. What I would like to do here to make a trade that would not be too risky is I'm going to say that in the coming week, if the MJ can stay above, see this consolidation here, and in fact, I can back this line up if I can draw a straight line backward. I can draw it back here and find even more resistance, and resistance can become support. So I'm going to say that in the coming week, and you can see the 20 days coming up here at $3.22. The 50-day moving average is coming up here at $3.16. So I'm going to say that's probably an area of decent support. So in the coming week, if the MJ can stay above $3.30, that's this level here, I may nibble, and I do mean nibble because I don't like buying at highs and selling at lows. I like the other way around. I may nibble on the MJ as long as it stays above $3.30. But I wouldn't, I'm not going to back up the truck here and buy a zillion shares to start with, because I'd really rather buy it down here around 340 or even 350 or so. That's where I'd really rather buy it if it's going to take off again. Now, volume has a lot to do with this. If it starts down on very low volume, then we may get a different opportunity, which is good as long as it stays above this line that I've drawn in the sand at $3.30. Is what I want it to stay above. And my initial stop is going to be down here. Once I've bought it, my initial stop is going to be down here at $3.10. Now, so I'd like to, as long as it stays above $3.30, I'll nibble on it, stop at 310, and then just buy little bits at a time, depending on how it bounces around in this particular world. And who knows? Maybe it goes higher from here. It just don't have any way of knowing that exactly right now. So I'm going to nibble a little bit, then assuming at some time it falls below the 200-day moving average and then climbs above it for a second time, maybe I add a little bit more then, and of course I will have a trailing stop. So you may want to keep an eye on the MJ in the coming week. Now, if you'd like to become a more successful trader, this is a great time to check out my online training programs. You can choose from 10 different programs, including our popular flagship product, 7 Steps to Successful Trading. People love this one. If you'd like to learn how to swing trade, which is good in this market, if you'd like to learn how to trade the trend, which maybe we'd end up doing with MJ, and bottom fish, learn how to bottom fish. Again, that's what we're looking to do here with MJ. Check out these timeless programs. They will show you how to elevate your trading skill set and how to increase your gains quickly and easily. Check out all of my online training courses by going to the link on this screen, or easier still, just click on the orange button below. Until next week, be careful out there. Keep green on your screen. I'm Toni Turner, and this is The Market Now.